Well, folks, all hell is about to break loose. And no, I'm not talking about the first hurricane to hit California in like 80-something years. I'm speaking about the financial markets. I'm speaking about the stock market. The next few days here are about to be absolutely insane. And it's going to shake up this market in a massive, massive way. And by the way, thank you for the hurricane rains here in Vegas here today. The kids are out there enjoying it. If you don't know, in Vegas, we don't see the rain much. So when we do, we go out there, we dance around, we get the umbrellas out. It's like a festival day, okay? But yeah, that's going on, okay? So a lot to get into in regards to this week. This is the most important week for the stock market, probably for the remainder of this year. I'll be completely honest with you guys. This is absolutely everything. We have several massive things going on, but two of these things are so gigantic, it's ridiculous. And I want to give my opinions, perspectives on how I see all this playing out, the risk-reward profiles I see, what I'm going to be up to in the market this week, whether I'm going to be buying, selling, doing some hedging this week, and all those sorts of things. So busy video. I appreciate everybody being here. Thank you for being subscribed, folks. A lot to get into here today, okay? So first off, a Monday after the bell, it's very interesting. I saw Zoom's reporting. Now, Zoom's have never been a stock I've owned, never really been a stock I've wanted to own, because it kind of feels like a feature type company rather than like some gigantic potential tech company, right? But I got to say, with Zoom, this is one of the most fascinating stocks I've ever seen in the history of the stock market. And I've been in this game for 15 years now. And the reason it's so fascinating is you can buy Zoom shares today cheaper than you could have bought the Zoom shares prior to Rona, right? Now, this is so fascinating because back in those days, Zoom was kind of a joke of a business compared to what it is today. Back in those days, the company was doing hundreds of millions of dollars of revenue a year. Now the company's doing, $4 billion plus a year in revenue, right? On a quarterly basis, even more shocking. Like prior to Rona, Zoom was doing $188 million a quarter in revenue. Now the company does $1.1 billion every 3 months in revenue. Now, if you're wondering why is the stock price lower today than it was literally prior to Rona, the revenues have, I don't want to say they've 10x, but they've gone up immensely, right? 7x, 8x, whatever that is. I'll tell you exactly why Zoom stock trades lower today than prior to Rona. And this is very important for everybody to remember this moving forward, okay? Zoom is a stock that has now been put into the category as this is as good as it will ever have gotten for that company. That might not be true. That's just the group it got grouped into. Everybody's going to look at this and say they'll never have the sort of growth ever that they had in Rona. And that business has somewhat peaked is what people will basically kind of get from this whole situation. Where prior to Rona, people said, oh, this company has 10 plus years of massive growth ahead and they can just knock out consistent growth rates for years. They had the insane run and then just a fall down to the floor in terms of just, obviously growth rates as well, right? Their growth rates are very, very small, if any. Now at this point in time, you look at a sequential over, quarter over quarter basis, right? On a sequential basis. And it's like, well, they did 1.1 billion, 1.1 billion, 1.1 billion. So now it almost feels like a stagnant business versus prior to Rona, it felt like a business that was just on a massive uptrend, right? So, nonetheless, it could be an opportunity in Zoom stock. It's, like I said, it's not one I own, probably not one I'm interested in owning, but I wouldn't be surprised if the stock actually does decent over the next few years. Now, Tuesday before the bell, we're getting Lowe's reporting their earnings. Lowe's is obviously massive retail giant, obviously in the home-related space in the United States of America, right? It's going to be fascinating to hear what Lowe's has to say because Home Depot's numbers were bad. They weren't a disaster, but they were bad. And Lowe's is usually the worst company out of the two, just to be quite honest. And so usually if Home Depot's doing bad, like Lowe's is doing even worse many times I've found. But Home Depot's numbers, they reported last week, these numbers are bad. I don't know if you guys even looked at these. The revenues are down 2%. That's really bad when you consider how much inflation we have going on. So if it wasn't for all the price increases, what would their revenue have really been down? Maybe 9%, 10%, something like that, right? Gross profit was down 2.3%. Selling general administrative was up almost 4%. Operating income was down 8.6%. They had interest expense much higher, right? And net earnings were down almost 10% year over year. For a company like Home Depot, especially when you think about it, you've got unemployment in the threes right now. You got unemployment in the threes, and they just had a net earnings down almost 10%. What happens if unemployment rate was 5%, 7%, 9%? What happens if we had a major slowdown in construction? That's something to worry about, right? And so it's going to be fascinating to kind of hear what Lowe's has to say. Now, Tuesday after the bell, Toll Brothers is reporting earnings. This is the highest end home builder of the public companies. It's really as high end you can possibly get if you're looking for an investment purpose in homes. I mean, the average price of a home sold for Toll Brothers somewhere roughly around $1 million, if I recall. Average selling price, okay? Average, right? Now, this one's going to be very interesting to listen to, okay? And the reason being is, basically every week we put together this investor report for everybody in the private stock group, right? And I want to show you a couple very interesting slides from that investor report from this past week, okay? The first one is AII investor sentiment. Now you might say, why does this matter for like a home builder like Toll Brothers, right? I'll tell you exactly why. For a company like Toll Brothers, they have a much more sophisticated buyer, right, than somebody like a D.R. Horton. No disrespect to anybody that owns a D.R. Horton home, but at the end of the day, like a D.R. Horton, they're trying to sell to people that are looking for a home that's like $300K. Toll Brothers selling to a much more sophisticated, let's just call it buyer out there, because they're trying to sell a home for $1.3 million. There's a big difference between trying to sell a home to somebody that can afford a $1.3 million house versus somebody that can afford a $300,000 house, right? So the reason this matters so significantly is if we look, just very recently, investor sentiment has started to go back down. We peaked in terms of investor sentiment basically about a month ago. Let's call it about a month ago. Today, as of recording this, it's August 20th. So just over a month ago, we peaked in terms of investor sentiment in regards to where people think the stock market's going over the next 6 months. Last week, it got worse. This week, it got even worse. So nonetheless, folks, this is not a good situation for a company like Toll Brothers. Their last quarter should be fine. It was a spring quarter. So their numbers should be fine for last quarter. Should be. If they are not, then they're really in some deep trouble. They should be fine. But the problem is what happens next quarter for this company? And that's where the worries really start, right? And the second slide that I think is very important we look at here is mortgage rates are getting out of control now at this point in time. The fact is we haven't had to deal with mortgage rates like this in 20 plus years, okay? So humans in the United States of America just aren't used to mortgage rates like this. Just bottom line, they're just not. Unless they're super like elderly people. That's just bottom line. Like we haven't had to deal with these sorts of mortgage rates. 7% plus now? No. Like people haven't had to deal with this since, I don't know, the 80s. Like this is not a normal thing to have to go through, okay? But we're going through it. And the worst part is it's just getting worse and worse and worse when it comes to mortgage rates. I mean, a year ago, we thought it was high at 5%, right? A month ago, it was 6.7%. Now we're at almost 7.1%. Oh my gosh. I mean, this is getting ugly and it's getting ugly fast, okay, in regards to mortgage rates. And this is going to ultimately put a huge, because if you run the numbers on what your payment would be now at a 7% plus rate versus what it would have been at 18 months ago at a 3% rate, it's a 9-day difference. And the bigger the mortgage, the bigger the payment. And the bigger you're probably not going to be able to afford it. Home builder confidence has also just started to slip. In August, it came out at a 50. That was down 10.7% from last month. It is up slightly year over year, but not just very slightly. So home builder confidence has started to go down. Mortgage rates are continuing to spike higher. This does not bode well for somebody like a Toll Brothers. So we'll see what they report for the numbers. I think it's going to be interesting to kind of hear their guidance and kind of where they go there. You just can't be confident as a home builder right now. You really can't. 1 minute it seems good. I think spring selling season was probably fine for these guys. But then all of a sudden, mortgage rates spike a bunch more. And all of a sudden, you're like, oh, boy, the consumer is not in the best place to be able to afford 7% plus mortgages right now. If you have worse credit, you're probably looking at 8% plus mortgage now at this point in time, right? Now, Wednesday before the bell, two very interesting companies to pay attention to. Foot Locker's reporting earnings. Bath & Body Works is reporting earnings, okay? Now, these are two generally considered dog stocks. But the reason this is so important to pay attention to is a company like Foot Locker, and by the way, Foot Locker is kind of going through a restructuring right now, so their business is probably a little more messy than a Bath & Body Works. But these are two companies that sell lower-end items. Most things in a Foot Locker are less than $100, right? Almost everything in Foot Locker is less than $150. If you go into Bath & Body Works, pretty much every single thing in that store. I think literally every single thing in Foot Locker. I guess we're switching cameras. No, we're staying on that camera. Okay, that's fine. Every single thing in Bath & Body Works is less than $100. Like almost everything in Bath & Body Works is less than like $25, right? So these are companies that sell products that honestly everybody can afford. You can understand people cutting back on maybe high-end purchases, $1,000 handbag, a $2,000 handbag, and things like that. But are they really going to cut down on $7 soaps at Bath & Body Works? Are they really going to cut down on a new pair of Nikes? I don't know. We're going to have to see. And so I think companies like this are very important to pay attention to. And by the way, both these companies are great, easy companies, in my opinion, to own for the long term. I personally own Foot Locker. I wouldn't mind owning Bath & Body Works. I used to own a company named L Brands. L Brands back in the day used to own Bath & Body Works. They used to own also Victoria's Secret and Pink as well, okay? And White Barn. Nowadays, if I recall, it's just Bath & Body Works and White Barn are together. Now, look at Foot Locker. It's a dog stock. It trades at, basically based upon this year's numbers, around 12. Next year, about 8. 4P, that's a joke. And a Bath & Body Works is trading at a 12 based upon this year's numbers and 10 next year, okay? So I'm just telling you, if you see some pullback in these sorts of names and these sorts of business models, that really means we're probably headed to an ultimate recession in 2024, because these are the sorts of companies that should be able to weather any sort of economic turmoil out there, because their products are just much more lower priced than a lot of folks, right? Now, when it really starts to get crazy is about 72 hours from now. That's when Nvidia reports, right? Nvidia's reporting Wednesday after the bell. This is the most important stock in the entire stock market this year. It's not going to be every year, but for this year, for 2023, there's no more important stock in the entire stock market than Nvidia. It's more important than Apple, Microsoft, Meta, every other stock. You could combine them all together. It's more important than them all together, to be quite frank, okay? This is it. This is it. The stock's up over 200% year to date. And this has been our fearless leader, kind of, getting some tech stocks back in the right track. Now, it's absolutely brutal in what Nvidia about to go through here, okay? Because here's what they need to do. They need to post a shocking 65% growth rate for this current quarter. Next quarter, they need to report 107% revenue growth. The following quarter, they need to report 121% revenue growth. In the following quarter, they need to report 90% revenue growth. These are the expectations Nvidia has for it. And so when I say all hell's about to break loose, okay? Nvidia has to come through. They have to report a shockingly great quarter. They have to report an insane next guidance, and just say basically for the here on out, they're going to be at like triple digit type growth rates. And if they're not, it's going to be a huge damper for Nvidia, and it'll be a huge damper for the market. Now, if Nvidia comes through, they beat on this quarter, they say we're going to grow, let's say we're going to grow like 125% next quarter, 150%. Nvidia will climb to 500, 550, and it'll happen quick. The shorts will be cut off sides, and then there'll be a new rampage on Nvidia, like, oh my gosh, Nvidia did the impossible. They're growing way faster than anybody anticipated. But if they don't, down goes Nvidia, down goes Qs. Down goes the NASDAQ, down goes AMD, down goes all the AI stocks. You'll even see ramifications for stocks like a Palantir and many others. So just do keep that in mind. It is going to be interesting. This is the most anticipated earnings I've seen maybe in my entire time of being in the stock market. I don't think I've ever seen a more anticipated earnings from a company in my 15 years of being in the market. I'll just be honest, this is everything. This is freaking everything for this company, okay? Some would say this is actually the second most important thing. Think about this. This is the most anticipated earnings, in my opinion, in my 15 years being in the stock market. And some would make an argument that this is actually the second most important thing that's about to transpire this coming week. Let that sink in for a moment. We'll get into the thing that some people are arguing is going to be even more important than Nvidia's earnings in just a moment, okay? Now, Snowflake, obviously all eyes are going to be on Nvidia Wednesday after the bell, but also Wednesday after the bell, Snowflake's reporting earnings. Now, Snowflake's an interesting stock that, has been a growth beast, and the stock is just collapsing right in front of us. I mean, just, back in July, the stock was $190. It's down to $147 going into these earnings, and this is just kind of one of those stocks that lets everybody know, do you want to take risk? Do you not want to take risk? If we're in more of a risk-on environment, people want to own a Snowflake. If it's more risk-off, they don't want to own a Snowflake. So this is one of those names to keep an eye on this week, regardless if you care about owning Snowflake or don't. Snowflake could be a stock I own. Let's say, they don't quite hit numbers, a stock tanks. Maybe it's a stock I end up buying later this year or in 2024 at some point in time. Not right now. Not right now. Now's not the time for me in regards to Snowflake at the moment. Now, Thursday after the bell, Ulta Beauty's report earnings. Ulta Beauty has been a stock that is just having a bad year. I mean, S&P 500 is having a pretty good year. The Nasdaq's having an amazing year, right? And here we have Ulta Beauty, which is arguably one of the greatest stocks in the entire stock market for the past 15 years. It's doing horrible. The stock's down 4% this year. This is another one of those to look at, like a Foot Locker, like a Bath & Body Works. If you see weakness in these sorts of names, it could be in a little more recessionary type environment, which could mean likely recession 2024, okay? So just keep an eye here. Now, the important thing to keep an eye with in Ulta Beauty is not just what the stock price reaction is after they report, what are the actual numbers? Because I can tell you Ulta Beauty always has these insane expectations and these insane comps. So it could be possible that, let's say the stock tanks, it might not be because the numbers is necessarily super bad. Like, look at the numbers. Pay attention to what their earnings are if you don't know where to go for that. Ulta Beauty Investor Relations. Type it in Google, boom, the page will be right there, and you'll be able to see their earnings when they come out Thursday after the bell. So keep an eye on that one, okay? Now, arguably the most important thing to happen this week, some would say even more important than Nvidia. By the way, in my opinion, Nvidia is more important than this. This is number 2, but some people would say this is number 1. Jerome Powell on Friday morning, early Friday morning, Jerome Powell is speaking, Jackson Hole, Wyoming, okay? And this is a huge deal because last year, Jackson Hole, Powell scared the crap out of everybody, right? You could say all hell broke loose on the market after that because that was the moment everybody's like, oh my gosh, like Powell's serious. Like he's going to take rates a lot higher. He's not messing around with inflation. And he really just hammered on the market. And that's when we had that next super leg lower, right? All the way until about mid-October. Around mid-October, late October, we started bottoming out the stock market and we started slowly coming up to the end of 23. And then obviously we kind of went on a rocket ship ride this year, right? And so a lot of people are a little fearful, like, what is Powell going to be up to here? What's he going to talk about? Is he going to focus more longer term, more shorter term? We'll have to just see. I think the markets try to scare him a little bit, especially with that move in the 30-year recently. I think they're trying to scare him a little bit to be a little more timid here, but we don't know. Powell could come out and say, "Nah, we're not even thinking about cutting. Don't expect any cuts till at the earliest late 2024, 2025." Like you never know what he could say. We'll see. We'll see where Jackson Hole Powell takes us here. Okay. The good news is for that, there's a lot of fear going into it, and so if he's not quite as fearful, don't be surprised that the market bounces really nicely. Let's just put it that way. Whenever you go into something and everybody's really scared, like, oh, what's going to happen here? I'm concerned. I don't know. Usually you set up for an upside run, if anything, okay? So that's just something to kind of keep in mind there. But if he comes in nasty, then we could be talking about things get shaken up a little bit more. This is one of those weeks I look out, and this is just one of those great weeks to have some cash around. You got a lot of really good companies reporting, Bath & Body Works, Foot Locker, you got, obviously you got Nvidia, the Beast reporting, you got Snowflake, you have, Ulta Beauty. You have a lot of interesting stocks reporting. You're going to have a lot of movement in stock prices this week in just other stocks that aren't even reporting because of obviously Jackson Hole and obviously because of Nvidia earnings. So you're going to have a lot of movement in this market this week, and this is just a great week to have some cash around. Especially when you can get 4 or 5% on your cash right now. These are the sorts of weeks you want to have something around. So Friday, you're able to make some moves out there because there's good probability some stocks you like will probably be available Friday for some nice discounts, regardless of kind of what happens in the whole Jay Powell situation, okay? So I can tell you I'll be a buyer out there Friday, no doubt about it. And just continue to take advantage. I appreciate y'all being here as always. Thanks so much. I'm going to keep you guys up to date with everything going on this week. This is a hell of a week we got going on here, folks. That's what I'll say about that. Appreciate y'all joining me. If you're looking to apply to join my private group with myself and the 1,000+ members, 6 and 7 figure members, 8-figure members, and check out the pinned comment down there. You can fill out an application. We can see if you're a good fit to join us in the private stock group. Much love and have a great day.